Hey everyone, welcome back to our Bitcoin update. I'm your host, and today we're diving into the latest positive developments in the Bitcoin world since last Wednesday, December 27th, 2025. As we kick off 2026, there's a real sense of excitement building in the community. Think fresh momentum, big players scooping up coins, promising chart patterns, and some helpful trends from the wider economy. We'll stick to the upbeat side of things, pulling from solid sources online and on social media, including how Bitcoin's linking up with stocks, cash flows, and even gold and silver. Grab a coffee, settle in, and let's chat about why this could shape up to be an amazing year. First off, let's talk about what's happening with the price and those technical signs that are starting to look pretty encouraging. Over the past week, Bitcoin's been holding steady through dips, with buyers stepping in strong and those recent lows not budging. We just wrapped up the biggest options expiry ever, about $23.6 billion worth, which had been putting a lid on things for a while. Now that's out of the way, prices can move more freely, and the outlook's tilting upward. Analysts are pointing out a couple of key positives. The MACD indicator is back to levels we saw at the 2022 low point, hinting that drops might be limited. Plus, there's a bullish divergence showing up, which means underlying strength is building quietly. Bitcoin kicked off the year by hitting $90,000 on January 2nd, and even touched $90,700 during the surge. It's up about 2% overall, and the market feels calm but energized. Zooming out on the long-term charts, things look solid. And historically, when Bitcoin's ratio to silver hits this 5-year support, it often sparks a rally. There's even some fun with inflation-adjusted trend lines that keep the big picture optimistic. We just broke through key resistance, shaking off that $87K to $89K rut, and it feels like the energy's shifting. If past cycles hold any clues, 2026 could catch a lot of folks off guard in a good way. Not every move is massive, but getting out of that range is a win, and if you're not paying attention during these shifts, you're missing the thrill. On the data side, behind the scenes, things are pointing to growing confidence. Big holders, those whales, are piling in again, with their 30-day balances hitting yearly highs. The markets bounced back from local lows, and after some hedging that kept things down, sentiment's stabilizing. Retail folks are getting more optimistic too, based on social chatter, which could fuel some nice momentum. Institutions are dipping in on pullbacks, which is calming volatility and bolstering Bitcoin's rep as digital gold. Even post-tax season, we've seen a New Year's rally kick in, with Bitcoin crossing $90K as expected for January. Long-term holders are net buyers now. After the biggest sell-off since 2019 wrapped up, that's a big relief on supply pressure. And history shows it often leads to strong gains. Smart money's returning, and with global liquidity picking up, risk assets like this could thrive. Sure, there was a short-term supply bump that raised eyebrows, but it might just tighten things up for a reversal. Outflows from exchanges jumped over 130% from late December to January 1st, meaning less available for trading, which often leads to steady consolidation rather than crashes. Institutions are really stepping up, which is a huge vote of confidence. BlackRock's European ETF just hit 10,000 Bitcoin, Tether's sitting on 96,000 as one of the top wallets, and merchant use jumped 53% last year. Real-world growth there. Even as some retail pulls back, big players are supporting the price. One advocate recommends 5 to 10% allocation even if you're not all in, and they're hinting at adding more themselves. In Russia, a major bank issued the first crypto-backed loan to a miner, and a big brokerage is rolling out spot trading to millions. The SEC's eyeing a new market structure bill for clearer rules, which could bring in more capital. The bull phase might just be warming up. Spot ETFs turned positive after outflows, with BlackRock nabbing its record daily inflow. Pros are saying the old four-year cycle might be evolving, with 2026 all about adoption, new highs and regs helping out. This feels like big money strategy, not hype. A U.S. bank upgraded a miner's target, predicting sector growth and hash prices could rise with more capital. Michael Saylor's confirmed as CFTC chair, pro-Bitcoin move. BlackRock calls it a top pick. Trump media grabbed 451 Bitcoin worth $40 M, and there's solid cash reserves in strategies for dividends. Globally, adoption's ramping up fast. El Salvador's doubling down, making it central to their plans, and more nations and firms are treating it as a reserve. A Japanese company got approval for another 1,000, aiming for 210,000 by 2027. The new U.S. Admins pushing quick crypto regs with U.S. money supply up 4.3% to a record $22.3 trillion, and inflation-adjusted liquidity rising. It's diluting fiat and boosting alternatives. Pakistan's eyeing a strategic reserve and cheap mining at $0.09 kilowatt hours that could be transformative. Lower mining activity is actually a positive signal for prices, and some see a decade-long uptrend ahead after last year's pause. Tying it all to the bigger picture, the economy's looking hot. S&P, NASDAQ, and Dow at records, yields under 4%. Asian and European markets strong risk-on mode everywhere. Gold and silver's choppiness is pushing folks toward assets with upside, and their rallies are actually good for Bitcoin too. Global liquidity's at all-time highs, with major economies expanding money supplies. That's fuel for sharp moves. The Fed and Treasury injected billions this week, and $10 trillion in U.S. debt refinances in 2026, adding more juice. Stocks and metals are flying. Bitcoin's poised to join. One brokerage flipped bullish, saying past regs capped gains, but now QE, bond buying, and debt shifts are tailwinds. Macros are swinging positive. Easier conditions, manufacturing rebound, broader growth beyond tech. Rate cuts, inflation around 2.7%, new SEC leadership, stablecoin laws all line up with Bitcoin's ties to TradFi and its hedge role. Systems show low vol, expanding money, bullish gold, weaker dollar prime setup. Gold surging past $4,500. Oz is a boost, and breakouts in small caps like Russell 2000 reignite the narrative. Even China's factory rebound helps. Predictions are heating up. Many see $200K this year, with traders eyeing six figures soon. One investor calls for $1 M by 2033, outpacing stocks. Near term, it might hover $90K minus $100K to digest, but long-term uptrends intact. Experts split on $150, K minus $170K, highs versus lower bears, but catalysts like ETFs and adoption tip toward upside. Tech analysis shows range trading but balance, and it's a buy for 2026 set to beat stocks and gold. Despite 2025's rough end down 6%, Q4 dropped 24%. Inflows flipping and higher lows signal rebound. Weekly charts show macro divergences paying off, holding key levels. The cycle might be changing, but that's even more exciting. It's not just numbers, it's liquidity shifts driving it. Extreme calls often miss, but easier capital and falling rates make growth likely not faith, but economics. Wrapping this up, The energy around Bitcoin right now is infectious with all these pieces falling into place. 2026 feels full of potential. Thanks for tuning in. Stay curious and we'll catch up soon. What's your take? Are you feeling the optimism?